Key U.S. benchmark stock indices had closed lower for the third consecutive session yesterday. The higher beta NASDAQ 100 declined by -0.7%, while the S&P 500 recorded a modest loss of -0.15%. The outperformance of the S&P 500 was supported by financials and energy stocks. The S&P energy and financial sectors rallied by +1.2% and +0.8% respectively. Yesterday's sell-off seen on the U.S. stock indices futures, S&P 500 and NASDAQ 100 that kick-started during European session due to rising coronavirus infection cases in Europe, with another national lockdown to take place in UK over this weekend. The decline on the S&P 500 and NASDAQ 100 futures had led their price action towards their respective key short-term support levels of 3,420 and 11,720, coupled with oversold conditions seen in shorter-term momentum indicators. Hence, yesterday closing levels on the S&P 500 and NASDAQ 100 seen near the highs of their respective intraday ranges can be explained by such technical factors. Latest key U.S. economic data continued to suggest a weakening job market as weekly jobless claims for the week ended October 10 jumped to the highest level since August unexpectedly to 898,000 versus consensus estimates of 825,000. Gridlock continued between White House administration, the Democrats-controlled House and Senate Republicans over the finalized amount for the much-needed second U.S. fiscal stimulus package. President Trump commented that he was willing to go beyond the $1.8 trillion proposed earlier by White House, but Senate Majority Leader Mitch McConnell rejected such offer. Trenches have continued to be dug in the long-drawn battle between US and China over the dominance in the high-technology arena. China is now set to pass a new law over this weekend that would restrict sensitive exports vital to national security that applies to all companies in China, including foreign-invested ones. A likely tit-for-tat measure towards US's latest hawkish stance towards China's megatech firms such as Tencent, ByteDance and Semiconductor Manufacturing International. Over at Asia, benchmark stock indices had started to trade in the positive territory, taking the cue from the positive movement seen in the U.S. stock indices futures at this time of the writing. Hong Kong's Hang Seng Index plus 0.6%, 24,285, Hang Seng Technology Index rallied by plus 0.9%, 7,611, China CSI 300 plus 0.3%, 4,815, and Singapore Straits Times Index plus 0.6%, 2,538, despite a weaker Singapore export data where the non-oil domestic export for September came in at 5.9% year-on-year below July's figure of 7.7% and consensus estimates of 10.8%. Japan's Nikkei 225 almost unchanged at 23,519. Hong Kong stockbrokers are painting a positive picture to the much-awaited Alibaba's financial arm, Ant Group blockbuster IPO to go smoothly, where they are willing to offer retail investors as much as 20 times leverage to have a stake in the IPO. Time is running out for Ant Group IPO to get regulatory approval from the Hong Kong Exchange by the end of October ahead of risk events such as the November 3 U.S. presidential election and potential sanctions imposed by U.S. administration over Ant's digital payment platform due to national security concerns. Ant's IPO will dual list in Hong Kong and Shanghai with an expected amount of at least $35 billion to be raised, making it the world's largest potential IPO to date.